Well, hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. Well, lots of cues to digest this morning. Global cues are looking mixed. GIFT Nifty hinting at a pretty much muted start for the Indian markets and lots of stocks in focus. We'll be talking about that with our technical expert. And we'll also be taking all your stock-related queries. So if you have any queries, send them in to us on our YouTube feed and we will have them addressed. But before we go any further, let's take a look at the top headlines at this hour. Wall Street notches a fourth straight day of gains. Investors bet on the Fed nearing the end of its rate hike cycle as US second quarter GDP growth is revised lower. However, Asian markets opened mixed despite a strong handover from the US, the GIFT Nifty hinting at a higher but muted start for the Indian market. Brent crude hits $86 a barrel as data indicates tighter supplies in the US. Softer than expected private jobs data and a downward revision to US GDP also fuels optimism that the Fed could pause rate hikes. Meanwhile, gold rises to its highest level in about a month. India's first quarter GDP growth may come in closer to that 8% mark amid a pickup in services sector and higher government capex. CNBC TV 18 poll pegs the figure at 7.9% versus 6.1% in the last quarter. A strong showing is expected from agriculture, construction and hospitality sectors. And as many as 38 firms express interest in IT hardware PLI scheme amid 11th hour rush. HP, Dell, Acer, Lenovo are all among the applicants, but Apple is a notable miss. The government has also revised its expectations from the scheme and now is looking at attracting incremental investments of over 4,000 crore rupees. And among the stocks in focus today, we put the spotlight on Sula Vineyards as sources suggest Berlin West Asia is likely to sell up to 12.5% stake via a block deal. Max Life and Kotak Life pick up stake in Spandana Sphoorty, and Aeroflex Industries is expected to see a listing pop on its debut on the Lal Street today. Well, with that, let's first bring on board our first guest for today, Siddarth Bhamre of Religare Broking, joining in this morning. Well, good morning, Sid. Good to have you. I think we're having a chat after a long time. A lot has happened in the market since then. We saw the Nifty come extremely close to that 20,000 mark, and then we fizzled out 3% or something around that off the record levels. But, what is the next big trigger, one should be expecting going forward, given the fact that the markets are extremely volatile and stuck in a range, so to say?
Good morning, Nandita. Yes, we're meeting after a long time, and thanks again for having me on your show. Slightly change in stance. I think a couple of months back when we were talking about how optimistic we are on markets, and we had a slew of ideas where one should invest in, and those ideas still continue. But there is slight change in how we are looking at market, and it's not that we are talking this now. Since last 1 month, we have been a bit, I wouldn't say cautious, but not comfortable. Not comfortable in terms of valuation. You were mentioning in your opening commentary that how market has in range. But if you just see it from a bit longer perspective, we had phenomenal opening for this financial year stock market performance. Last 5 months, markets have closed in positive territory, and it is this month it would be closing negative. So in larger scheme of things, there's nothing different or nothing extraordinary if there is a correction in market. And it's after quite some time, we have seen that for 5 consecutive months on closing basis, our markets have given great returns. And now in month of August, we'll be, if we don't rally more than 2% today, then we'll be closing negative. I think that's pretty fine. And if I combine with my opinion on valuation, which seem to be rich at this point of time, this consolidation come correction, negative bias, call what you will, is a welcome thing to happen to fundamental investors. I also want to point out, Nandita, one thing that a lot of people are talking about, how loss of China would be benefit of India. No doubt it would be. But then what not many of us are talking at this point of time, that there is one market which is defying all laws of gravity year to date is Japanese market. In Japanese economy, we all know is bigger, much better in terms of transparency compared to China. And a lot of funds are moving there. So it is not necessary that the entire loss of China would be entire gain of India. A lot of funds are getting diverted. In fact, Japanese economy is coming out of this stagflation or deflationary environment after 25 years. So that is where funds are moving. and not everything is coming our way. Having said that, are we expecting that, okay, if we are overvalued, then our markets will show big correction? No. If you look at how markets are behaving, these are not signs of a market which will show you a very large correction. Time correction or consolidation with earnings, again, doing what they have been doing since last few quarters, I think that would again bring us at comfort level. Even in this market where we feel that the valuation of Nifty is slightly stretched, there are a lot of pockets, both in large cap, mid cap segments, where we are seeing that growth momentum is and strong margins and stocks are available at reasonable valuations.
Siddarth, let's talk about some stocks on that note. I want to first bring your attention to the life insurance space. Post-budget, they have seen some bit of correction, but off late, they have recovered quite a bit. Anything you're liking in the life insurance space now?
So, Nandita, a few months back, we came out with a thematic report on insurance space. And though, we don't believe in timing, but fortunately, all these stocks which we covered in that space met their target prices, and we were bullish on most of the names over there, including LIC. But then what we are liking the most, even after this significant run-up in prices in last few months, is SBI Life. Now, despite very strong base in terms of premium collection, it's still growing at a reasonable pace of around 19% or so, the gross premiums. If you look at the channel, that is a banking channel, which ensures that there is a substantial growth, I think that is a key USP for this company. Margins declined here, Nandita, and that's the reason some of the participants might be perturbed. But let me throw some light over here. There are two kind of products, par and non-par. And margins in ULIP and protection funds are less. And we have seen significant growth in ULIP schemes. And that's the reason we have seen decline in margin in SBI Life. So our recommendation to our clients has been, since last 2-3 months, is to take a decent amount of exposure in insurance space. The valuation parameter for this space is price to embedded value. And SBI Life has enjoyed 3 times price to EV. And right now it is available at 2.1 compared to the what numbers we are seeing for FY25. It's a reasonable valuation. It's near to the attractive zone, and we are anticipating a good revenue growth and increase in the valuation metrics, which would take prices higher. And we have a target price around 1644, which gives you around somewhere around 20+% returns from current levels.
All right, that's the view on the life insurance space. SBI Life is something that Sid likes. But Sid, let me talk to you about the premium bike space. We've seen competition heat up. We've seen premium bikes coming out of Hero stable, Bajaj stable, posing competition to Eicher Motors. Yes, just a few days ago, Hero has launched Charisma as well. But would you, or should I say that you are a Bullet loyalist, and would you stick to Eicher among the premium bike segment now?
Well, I was at one point of time, and then I started cycling. So then I don't have bikes anymore, and I have a lot of cycles. But we don't have anything of that in listed space. So keeping that aside, Nandita, I think market has been very concerned, and rightly so, that competition is increasing. And from the valuation metrics, Eicher was quite expensive a few years back. But then same story was applied to Maruti as well. Stock did underperform for quite some time. Eicher Motors, if you look at, the prices have been underperforming since quite some time. In fact, last 2-3 years, prices have not done anything, to be honest, after that bounce back from COVID lows. But then from the valuation metrics, at one point of time, Eicher was available at, 45, 50 multiples also. And now it is available almost at half of it, around 23 P. So it is a good stock. Quite possible that it might lose market share over a period of 1-2 years when the competitors would have higher output in terms of bikes which they are planning. So a lot of companies have mentioned about their tie-ups with international players and decided to launch. But are they going to launch what kind of sale numbers Eicher does in next 2-3 years? Answer to that is no. So it is going to take a lot of time for iShares to lose a decent amount of.
I think we lost.
Reduction doesn't means that there will be loss of revenue. There can be growth in revenue and loss in market share over a period of time. Because if you have 90% of market share, then definitely that can happen. But I believe valuations are attractive, and Eicher Motors can do pretty well in terms of stock price from current levels as well. So even this stock for attractive valuation and decent decent revenue growth, we believe should be part of your portfolio from 1 to 2 years perspective.
All right, Sid, we're running out of time, but one more question on the IT pack. I remember you've been a contrarian when it comes to the IT space, and of course, looking at the first quarter performance, most of them have disappointed, especially led by Infosys. But I remember last time I spoke to you, you were quite bullish on HCL Tech. So would you maintain that stance after the first quarter earnings?
Yes, and as you rightly pointed out, that numbers have not been, very encouraging, or I would say disappointing. But what we have observed, Nandita, that everything is factored in price. You can't get these stocks, substantially below these multiples. HCL Tech for FY25 earning is trading at 14 times. An IT company, a large cap IT company, trading at 14 times. Look at the stock performance; it has done well. I understand that there has been a revenue degrowth quarter on quarter, but year on year it has grown by 7% or so. Management has been confident, and that's the reason they have not changed their guidance. Looking at the scenario, I just want to say, Nandita, that Nasdaq has been the best performing index year to date. So people connect IT and slowdown very closely, but slowdown also leads to cost optimization, and a lot of spending on IT happens for cost optimization. So it is not necessary because the US is going to slow down means there is going to be very deep correction in the IT space. So I believe HCL Tech, even at current levels, is a decent buy. We have a target price of around 1333, a decent upside from current levels. So even that remains our one of the top picks.
All right, that's the view on the IT space. HCL Tech remains a top pick. With that said, thanks a lot for taking out time and joining in this morning and sharing your thoughts with us. As always, it was a pleasure speaking to you.
Thank you so much.
Right, on that note, let me bring on board our technical expert for today, Shrikant Chouhan of Kotak Securities, joining in this morning. Good morning, Shrikant. Extreme volatility in the markets. Yesterday, we saw a very cool triple-digit rally coming in, but last hour, kind of spoiled the mood. And once again, it was the Bank Nifty that was the culprit. It shaved off 500 points from day's highs. But today being the expiry day, what are the kind of levels you'll be watching out for?
Yeah, good morning, Nandita. Good morning, everyone. I think the Nifty is still in the range. It is not crossing the levels of 19,500 confidently. In fact, it is finding resistance whenever there is a upward activity in the market and whenever the markets are very close to 20 days simple moving average. And typically, whenever there is a selling in the market, most of the time we see that sellers, they try to use these important levels, I mean to say important averages, to take some profit on the market. So yesterday also when the market was on the higher side, it was very close to 20 days simple moving average. And from there all the way we saw the levels of 19,350. For the day, the important level is around again 19,330, which is yesterday's lowest level. Below that we can expect some weakness. And as it's a day of monthly expiry, I think 19,200 is going to act as major support for the market. So below 19,330, 300, we are expecting some weakness up to 19,200. But at the same time, 19,400 will act as immediate resistance. And above that only we can expect some short covering in the market because there is huge amount of call writing. Close to 1.5 crore shares are around 19,400 levels. And above that only we can expect some short covering. For the Bank Nifty, the important level is around 44,500.
All right, that's those are the levels to watch out for on the index. But let me first talk about the stock of the day, Shrikant. Sula Vineyards. There's likely to be a block deal in the counter. According to sources, World Invest Asia is likely to sell somewhere around 13% stake via a block deal, and the block size may be somewhere around 539 crore rupees or thereabouts, and shares may be sold in the range of 473 to 509 rupees per share. In fact, the share is quoting at 509 at the current juncture. Last 6 months, it has given good returns, but over the last 1 month or so, it has come under a fair bit of pressure. How should one trade into this counter now, Shrikant?
Yeah, I think for Sula Vineyards, again, if we track the overall activity of the stock of last 2 months, then it is not crossing the level of 530, 540. I'm to say there is huge amount of resistance close to 530, 520 levels, but at the same time, around 450, 470, there is a good amount of support. So in case if we see the stock is falling to these levels on the back of this particular block deals or bulk deals, then close to these levels, if there is a medium to long-term view, then we should look for adding some stock to the medium to long-term portfolio. We are of the view that overall this particular industry is going to do well in the near term.
Right. I also want to get in your thoughts on Zomato. There have been a couple of block deals in the counter over the last few days. Stock has been doing extremely well. Last 5 days, we've seen gains of 6% or thereabouts. Stock around that 100 rupee mark. But lots of experts predict levels of 120 going forward. But would you say that it's poised for higher levels, or would you say 120 is the kind of level one should be watching out for over the next 3 to 4 months?
Yeah, it looks like the way the formation is building up on a day-to-day basis. If we see the pattern, then whenever there is a fall in the stock, we see some specific buying interest. And after all these particular block deals, even though these block deals, the stock is managing to sustain at higher levels, which is a positive sign. In case if there is any correction, then we should be buyer, because currently it is very close to its crucial resistance level of 100, 105. So between these levels, we are expecting stock to come under some profit-taking pressure. But at the same time, if there is any correction close to 93 or 92 levels, then there we should look for adding some positions. So broadly, we are of the view that yes, the stock is moving higher, and we may even see the levels of 120. It will take some time. It's not that it is like going to hit these levels in a very short span of time, but certainly the stock is overall showing good momentum.
All right, that's the view on Zomato then. But since we are talking about block deals, Spandana Sphoorty is another stock that saw a block deal yesterday, and institutions like Max Life, Kotak Life have picked up 3.5% stake or thereabouts. On a YTD basis, the stock has done fairly well, Shrikant, but recently it has come under some bit of pressure. But would you advise investors to use this dip to buy into this stock now?
I think again the overall formation is suggesting us that it has spent a lot of time close to these higher levels. I'm going to say the current levels around 840, 850. In fact, since 2020, whenever the rally was there in the stock, we saw a good amount of profit taking close to these levels. And today also we are going to see some, or maybe in the past also, we saw some block deals close to these levels. So till the stock is not surpassing the level of 900, I think it is better to stay away. Again, the stock can correct to the levels of maybe 700 or maybe 650. There the stock is having excellent support. But on the dismissal of 900, we can expect some technical breakout. And in that case, the stock will start rallying towards its listing price, which was close to 1350 or 1380. So again, the view is very clear. If there is a medium to long-term view, then certainly we should be buyer close to 700 levels.
Right, that's the view on Spandana then. But I want to ask you your thoughts on the Adani group of stocks as to how one should be looking at these stocks, especially in the futures and options segment now, Shrikant. Would you advise investors to, trade into this counter, into these Adani group of shares rather?
See, the stock is under event and under a lot of news flow. So it is always better to stay away from taking any specific short-term position in the stock, because then we cannot follow the exact stop loss levels, or the stock is not going to follow the stop loss level. That's the overall view. We are going to see some huge amount of volatility in the near term. That is the overall view based on its current formation. But in that particular space, we like Adani ports, and there we are expecting further more activity. If it corrects to somewhere close to its important support levels like 800 or 790, then whenever the stock has fallen to these levels, we saw some rebound. At current levels, I think it is in between. So it is going to spend time between the levels of maybe 850, 860 on the high side and 790, 780 on the downside. So buy on dips should be the strategy for Adani ports. Rest of the other stocks are not exactly following to the technical pattern.
All right. That's the view on the Adani group of stocks. But let's take up some viewer queries that are trickling in this morning. Rajiv Menon wants to know your thoughts on Suzlon. This is one stock that has been fairly active and on an upward trajectory on the back of order wins. Do you think it's time to look at this now from a trading perspective, or would you say, invest in this counter for the next 2 to 3 years and stay put?
See, based on its technical formation, it is crossing all its important levels without any major hurdle. Even though the equity is huge, the stock is crossing almost all the levels, which is an indication of like someone is taking active interest in the stock, or maybe the street is more bullish on the stock. But at the same time, if we consider the overall space, power space, then we are seeing good amount of buying attraction in almost all the sectors. And whenever there is we see some activity in the power sector, it lasts for a longer time. Based on technical formation, I think it is heading for the levels of maybe 30, 32. There the stock is having good amount of resistance. With a technical view, with a trading view, certainly we should look for avoiding taking any trading position. But if there is any investment, then certainly we should look for holding to the same, because we are expecting further more gains from the current levels.
All right, that's the view on Suzlon. Then next query is coming in from Vijay. Wants to know your thoughts on Nuclear Soft. Now, this stock has been in a downtrend over the last 1 month. It is quoting at somewhere around 998. The 52-week high is somewhere around 1260 or thereabouts. Should one look at buying into this now, or if one has positions, should one look at holding it, or is it the time to exit?
See, this is just moving up and up, and it is crossing important levels. But at the same time, the way we saw some good amount of appreciation from the lower levels, it is better to stay away from taking any position at current levels. There are other stocks in the mid-cap IT space which are really doing well. In that, we are specifically bullish on stocks like L&T, Infotech, Mindtree, based on its technical formation. I think it is heading for the levels of 5,500, 5,550. And also, we like Naukri, InfoEdge, which is currently around 4,350, 4,370. From here, the stock can move to the levels of, again, maybe 4,700, 4,800 in the medium to long term. So these are the two stocks which are very close to their important support levels, and the risk-reward ratio is quite favorable.
All right. Let's take up the next query. It's coming in on Renuka Sugar. How should one look at it? Because sugar stocks have been in an uptrend, I think. Rakesh wants to know your thoughts on how should one trade into Renuka Sugars now?
Yeah, again, all these sugar stocks, they are participating in the overall up move. In fact, they are doing much better than the overall pattern or some trending activity that they saw in the past few months. So this time we are expecting stock to do well from the overall sugar space. In that, yes, Renuka is very close to its important crucial levels of 49. In fact, since last almost 6-7 months, whenever the stock was very close to this important levels of 49, we saw some profit taking. But this time, the overall oscillators and price pattern is indicating us that the stock is going to surpass these levels, and the next level could be between the levels of 55 to 58. So certainly it's a buy even at current levels, and if there is any position, then just hold on to it.
All right, that's the view then. But let's quickly take up one last query then. This one is coming in on Z. The stock has been in news and it keeps reacting to that. So if one wants to, make an investment in the counter instead of, trading it on a intraday basis, would you advise them to look at this now?
I think the way there is news flow, certainly if there is a medium to long-term view, then we should look for adding this stock even at current levels and more on dips. Broadly, we are of the view that the stock is going to perform, and in the long run, we may even see the levels of 330, 340 based on its technical formation. The stock has absorbed a lot of selling pressure close to 250 levels, and now it is sustaining well above the same. Based on its technical formation at current levels, certainly it's a buy around 250, around 260, 265, with a target of minimum 300 and maximum could be 330.
All right, Karnati Nagaraju had a query on this stock. Hope that answers your query. But before I come to your picks, Shrikant, Saurabh wants to know whether it's the right time to look at some of the hotel stocks, given the fact that Indian hotels hit a fresh 52-week high yesterday. Would you say Indian hotels looks interesting at the juncture, or would you look at other stocks like a Lemon Tree or a Chalet Hotel or something like that?
Yeah, Nandita, almost all these stocks are really doing well, and they are absorbing a lot of selling pressure. In fact, after a very long time, we are seeing good amount of buying attraction and sustainable momentum in the overall space. Indian Hotel has spent a lot of time close to these 410, 420 levels. But after crossing these levels, we can see the levels of maybe 450 or 470. So certainly it's a buy, but yes, again, we need to keep a long-term view or medium-term view, because in the short term, we saw good amount of activity in almost all the stocks. From this particular space, we like Indian Hotels as well as Mahindra Holiday Resort and Lemon Tree. So all these stocks are crossing their important levels. We are expecting from at least 10 to 15% sort of returns from this space.
All right, that's the view on the hotel space then. But with that, we've come to the end of the query segment. Shrikant, any stock recommendations for our viewers this morning?
Yesterday, we saw a good amount of activity in almost all the auto companies. And Maruti was very close to its important crucial levels of 9,900. Beyond that, we can expect some activity towards 10,000. But Mahindra & Mahindra is the stock which is just below its all-time highest levels of 1,600. And above 1,600, the stock can move to the next levels of 1,700 to 1,730. So at current levels, it's a buy with a stop loss at 1,550. We can keep a target somewhere close to 1,660 and 1,700. We also like few power companies, and in that NTPC is also again very close to its falling trend line of 222. Above that, we can expect bullishness, but even at current levels, it's a buy with a stop loss at 215 with a target of 230, 235.
All right, M&M and NTPC, two stock recommendations coming in from Shrikant. With that, Shrikant, thanks a lot for taking out time and joining in and sharing your thoughts with us, and of course, answering all of your queries as well. It's always a pleasure speaking to you. Well, with that, we've come to the end of this edition of Morning Trade. But before I go, let me tell you, keep an eye out for the new listing today, Aeroflex Industries. In fact, it will be making its debut today, and analysts are expecting a 50 to 60% listing pop versus its issue price of 108 rupees per share. In fact, IPO saw a stellar response and was subscribed 97 times the shares on offer. So that's one listing that you should be watching out for. With that, it's a wrap from me. Thanks a lot for watching. From me and the entire team, have a good trading day. And of course, stay tuned, because coming up next is Opening Bell.
How do world leaders view India?
I've long believed that the relationship between the United States and India is will be one of the defining relationships of the 21st century.
The bright spot of the global economy.
The growth rate for India, which is 6.8 in 2022. Let's not forget, this is one of the bright spots in the global economy right now, such a high growth rate.
The potential of India is enormous, and you have now a reformer, a radical reformer, who has the ability to transform it.
On the verge of a big transformation.
इस अमृत काल में हमारे संकल्पों की सिद्धि हमें आजादी के 100 वर्ष तक ले जाएगी.
A magnet for investment.
I'm actually incredibly excited about the future of India. I think India has more promise than any large country in the world.
The world is bullish on India. Money Control is bullish on India. Join the campaign. Tweet to us with #MC Bullish on India.